Hey everybody, Brian Shannon here from AlphaTrends.net. Today's Saturday. It's the 28th of June, 2014. Let's look at the markets for this week. The S&P 500 was down just ever so slightly, just 8 basis points. NASDAQ was up 1%. Russell 2000 up slightly. 70s lost a little bit of ground, but pretty uneventful week, really. I guess the biggest winner here was the bonds once again. So let's go ahead and take a look at the charts and see, make some sense of this and see where we are. So we're obviously still in a primary uptrend on the S&P 500, and this trend line is something that looks relevant. It's also something that we've had some meaningful support here over the last month, near about that 193 level. Now, this past week, we kind of entered the market thinking that it was time to be a little bit cautious here because of the 5-day moving average that we broke below midday on Tuesday. I don't know what's going on with the chart, why it's not holding, but anyways, we're back above that and above this prior level of support, which had been the little band of resistance. So going into next week, it is looking more positive once again. But you know, in the daily time frame, clearly still in an uptrend. Intermediate term, I would say, is more neutral, and it appears this market is really kind of correcting a little bit more through time than through price. The only thing that would really concern me for the intermediate to longer term would be a move back below about that 193 and a quarter level. Otherwise, we remain in a primary uptrend, of course, innocent until proven guilty, and with that 5-day moving average advancing, or with us back above that 5-day moving average, we want to see that this market can continue to at least be neutral to positive here. The NASDAQ, again, this market broke out here to new highs. So we were looking at this saying that, you know, on I think it was on Tuesday I did that video saying, you know, this market looked more neutral as it was kind of still within this range, and you certainly didn't want to short it, but that you know, higher prices were still possible. But I was thinking that maybe a correction through time was more likely than anything here. But we obviously continued with the path of least resistance, which is higher, and going into next week, we're obviously set up nicely. I think that 92.50 is really kind of a more intermediate term important level that we want to keep an eye on. The Russell 2000, as I mentioned, you know, just breaking below a 5-day moving average and finding resistance at it isn't enough to be an aggressive short seller, not when we have a primary trend turning higher. So we've got the primary trend is still higher. We're back above that. We survived a little shakeout, and you know, a lot of people want to turn bearish as soon as we have a little bit of selling in the market, where I say, you know, it's better to kind of just sit on the sidelines and wait for things to set back up. That if you're going to be a short seller, it should only be for the very shortest period of time, that is for aggressive day trades. We're above a rising 10, 20, and 50-day moving average. The 20-day moving average down near 116 is looking like an important level. Now, that is 2.5 points away, so you know, we've got a little bit of wiggle room to really kind of still be in a neutral range. And I think that, as always, you know, you want to manage risk based on what you're trading. This is a concept I talk about constantly, that people still say, hey, well, Brian, you know, we're looking at long stocks, but we're below a declining 5-day moving average, let's say, on the S&P 500. But if the majority of stocks are still set up positively, that's what we want to focus on. If you're concerned about the risk of the overall market, you adjust your risk by either staying on the sidelines in cash, or you reduce your share size, or you hedge some way. But when the stocks are telling you that the primary trend is higher and the intermediate term trend is higher, and you get a buy signal, you go with the buy signal and you manage risk. Risk management is our #1 job, and you don't manage risk by saying, well, the S&P 500 is below the declining 5-day moving average, so I can't go long anything. That's not the way to look at the market. There's always stocks that are going up, there's always stocks that are going down, and you have to manage risk based on what you're trading, not on theoretical relationships that are supposed to be there. Semiconductors still holding above that key level at 48.5. So we're seeing that, you know, this really nice rally that we've had here over the last month and a half is being digested more through time than through price, and 48.5 still is obviously a significant level. We came down, we were below the declining 5-day moving average, and it looked like maybe we were going to get some further selling after breaking that support level. Again, these charts are very frustrating here. Maybe it's because I'm on my laptop. I don't know, because I don't usually use the laptop for these. But so bear with me on that. But the semiconductors, I'd say, are more neutral. Yes, we have a declining 5-day moving average, but when the primary trend is higher, if you're going to be a short seller until we have a real solid pattern of lower highs and lower lows, then you want to be looking at it as more neutral. So 48.50 to 48.75. If we break below that and hold below it, then perhaps we get deeper sell-off, but the trend is higher. Don't fight the trend. The financials this week were they down slightly, right? Down 1/3 of a percentage point, and we can see here that on the daily time frame we continue to hold above this key level, 2250-ish, 2230 to 2250. I think is the key band of support that we want to see hold. Otherwise, we're correcting through time here, and we're still prior resistance still acting as support. If it breaks below it, then we have a different issue. But right now, we are below a declining 5-day moving average, but we're within this bigger band in here. So I look at this financials as more of a market that's kind of consolidating after this run up, and consolidations tend to resolve themselves in the direction of the primary trend, which is obviously higher. So I think that we're still going to see higher prices coming for the financials as well. We've got a longer term uptrend obviously here, and so unless we were to break below 2250, we're still in a good trend there. Gold gained a little bit of ground as well, really holding on to those gains well. The financials, the bonds, as we mentioned, and here's something I harp on a lot too, is it's the direction of the 50-day moving average, not a couple closes below it, that matters. So we have a rising 50-day moving average, and here I think we probably sucked in a lot of short sellers here from that failure to break down further. They got squeezed this week. Now we've got support that should show up here at about 112.5, so this prior resistance, and the primary trends in bonds is still higher. So we pulled back a little bit price-wise, corrected time-wise, and now the buyers are back in control once again. Apple made some recovery on Thursday and Friday here. As we spoke about last week, we were still guilty till proven innocent with the declining 5-day moving average in the intermediate term. And what I'd like to see this week is maybe a rally up towards that 92.50, 92.60 level, a little bit of consolidation, and then perhaps it could continue higher from there. The primary trend is still obviously higher in Apple. We've got this area that's been resistance, 92.50 to 92.60. So perhaps we continue to run up towards that level, pull back slightly, and then break it. That would be a good buy signal in my opinion. The stocks that I had mentioned that we wanted to keep an eye on this past week, JASO, it didn't clear this resistance up in here at 11.5, so there was really no reason to be a buyer of that. You can see we gapped higher this day, and this is why we don't chase the gaps. It pulled back. I think that next week, though, this is still set up nicely, this JASO, and even perhaps above the highs of Thursday, that JASO could continue to move higher. So that's something I'd be looking at as far as a individual stock to continue to focus on as far as potential upside. And if you do get involved in it, of course, risk management is job number one. Worst case stop would be down here, but I'm thinking maybe buying a little bit above about that 1092, and then perhaps even adding if it breaks this level here. The shares of Fastenal, I suggested we keep an eye on for this past week, and Fastenal, it really didn't do anything at all. There's really no reason to be involved in there. It just kind of looks like a big mess right now, so I'd take that one off your list. I had mentioned the potential for VLCCF to continue if it could clear this high here. Obviously, that didn't happen, so there was, again, no reason to be involved. We were looking for a higher high above a rising flat to rising 5-day moving average. That didn't occur, so no reason to be involved in it. ISR was a nice one, and this one, again, it's a risky biotech. It's up near all-time highs, and there's a big short position in it, so that's always nice to see that, we had a gap higher on Tuesday as it broke a little bit of resistance. So if you're involved in that one, hopefully I think you take a little bit of it off, and your worst case stop probably down at about $2.90. But because it's a risky biotech stock, when you get a gap like that, it makes sense to take a little bit off. Microsoft is breaking out, and again, I think it's a better investment stock than a trading stock. So still looks like it's headed towards about 45. If you're involved there, I'd say raise your stop up to about $41.40 at this point, maybe $40.35. Navistar, this was a good one, actually. It's a good lesson, too, because I was talking about buying it above 38.03, and I was very clear to say, when these stocks go, raise your stops. So the way we traded it at Alpha Trends was to take half of it off at $39 a share, and then we got stopped out of the balance right here. And that, of course, saved us from a real nice winning, a decent winning trade. It wasn't meant as a day trade, but it ended up being a day trade because that's what the stock told us to do. And we have to listen to the messages of the market. The message was that it was pulling back and it was time to take some profits. That was also the message in CUR. We talked about getting long this one above this little resistance, and it tried to get going on Tuesday. And as I'd mentioned on Tuesday, it was disappointing action. I got out of it as it broke down in here, and the stock continues to break down. So I don't think that CUR is the right thing. Again, we want to get involved when the signal tells us to get involved. But if the story changes, which it often does with new price information, then we've got to reassess why we're in there. And do you want to be holding a stock, a little biotech stock, with at a loss? Personally, I don't, so I'm out of it. I'll continue to watch this thing as it maybe sets up again. But taking a little bit of profit initially as you get a little pop, like we did in Navistar, and then raising your stock allows you to make money in a situation where people say, well, I want to be a swing trader. But if the stock tells you a swing trade isn't appropriate, it's not up to you to decide how long to hold the stock. It's up to the stock to tell you, here's how long it looks like you could hold it. Now, a couple ideas I would keep an eye on next week. Ballard Power really starting to look nice in here, and I would say that getting back above probably Friday's high. We have a position in it. I have a position in it. But, I probably got involved a little prematurely because we do have that 5-day moving average still declining slightly. But back above Friday's high, I think this one has the potential to continue to go. I would add to my position in there. And I think that your stop in Ballard, worst case, probably down here at about 395. Mine's a little bit tighter. But, again, there's no one perfect way to trade or perfect place for the stop. Moby is another one that looks good to me. Like it had this big run up and then it pulled back, lower highs and lower lows. It's gone sideways. It broke this little resistance on some big volume. That's nice to see. Subsequently, it's consolidating on lighter volume relative to what it advanced on. 653,000 shares a day on average is what it trades. And Moby has got this longer term base where this prior resistance held as support. It's starting to move higher again with this resistance now looking like support. So some people would call that a fractal, that this prior resistance holding a support. Then you break it down to a shorter term time frame, resistance holding a support. It's got the good volume pattern, and I think that Moby is a good one to keep an eye on for strength. Probably going to have to clear last week's high up near about $8.23, I believe, was the high last week. But that's definitely something I would keep an eye on for potential further upside. Worst case stop probably down at about 760 or whatever's appropriate for you, your time frame, and your risk tolerance. Another one that looks nice is a higher price stock is Biogen IDEC, BIIB here on the weekly time frame. You can see has been in a massive uptrend, riding this rising 200-day or 40-week moving average. It broke this resistance at 300, which has held its support after that steeper correction, and now it's consolidating here, kind of building what I like to look at as a little bit of a launching pad. If it can get beyond this level right here, then to me it looks like Biogen could make a run for the highs, up near 350 or so. Where to buy it is, probably, where the momentum really comes in is back above 323-ish. That's, still, that's 5 points away. So I'd say keep a close eye on this one. It looks ready to go. And these, again, are the types of stocks we talk about every day on Alpha Trends. Thanks for tuning in, and hope you had a good week and a good week coming up. Thanks.